Hi guys, welcome to my channel. And if you're new here, remember to like, subscribe and share and do the right thing. And if you haven't listened to one to wherever this one is, I think this is number 12. If you haven't listened to the ones previously, please do yourself a favor and do listen to those ones, because those ones, what I'm doing here is a build up and this module is a build up. So you might have to go back and listen so that what I'll be saying now is going to be making sense. So remember to like, share, subscribe, and I'm not going to be distributing the study guide that I'm using because it's a property of Unisa. And because it's a property of Unisa, I can't go there and just publish their information and stuff or attract copyrights. But if you do want to download, and I suggest you download, go to Telegram groups and you're going to come across AUE 1501. It's an official Unisa group. Get the study guide, and I'm using the 2021 module. So remember, auditing is not really that much of a dynamic module where you would get situations where they will change the module and they will change the things that they were talking about. It's not the case when it comes to auditing. It's not the case. So because it's not the case, you can actually you can actually still apply the 2021 study guide to futuristic studies. They're just going to add one or two chapters or 1 or 2 3 keywords, but the core of it is most likely going to be the same. So without wasting much of your time, let us get right into it. So the topic we're going to be dealing with today, we're going to be dealing with a topic called assertions. So with assertions, there's a lot of things that you have to look at. There's a lot of things that that you have to look at, and it's a term that is going to be following you throughout your studies of auditing. So what are assertions? So basically, when you're dealing with auditing, remember you are an external auditor for the purposes of this module. You are not part of that company. Let's say ABC Traders, they invite you to perform an audit. You are not part of ABC Traders. So because you're not part of ABC Traders, you now have to come and give an opinion. And the opinion that you're going to be giving, you're going to be giving an opinion on their financial statements. So you are going to be basically saying their financial statements, are they a fair presentation of what's happening? Are they an actual presentation of what's happening? So before we even go into that, you now have to realize that before you talk about anything, you're an external auditor, meaning you are not part of the company. You are outside of the company. So because you're outside of the company, there are certain things that you have to actually bear in mind. You were not part of those financials. You're not part of the generation of those financials. So management is going to be saying our assets are XYZ. Bank is going to be, let's say, for instance, 500,000. You were not part of the people who calculated that bank amount. So you can't just go at it and just say, no, because bank is 500,000, so it's supposed to be 500,000. But the management and those charged with governance are asserting that ABC, the bank, is actually so and so. So you now stuck with the dilemma where you have to ask yourself, okay, do I then take what's being said here, or do I go and test? Because remember, as an auditor, we talked about the agency. Someone is going to make a decision based on the fact that you are also confirming, you as an external party are also confirming that ABC is correct. So they are going to make a decision based on your assertion, like based on your statement, basically your declaration or your opinion about those financial statements. So your opinion really matters as an external auditor. So before you give an opinion, you have to verify that the things that I'm trying to give an opinion on are accurate and they are the true reflection of what's going on. So basically, when you come across when you now as an auditor stuck with such a dilemma, what are you looking at when you're looking at financial statements? When you're looking at financial statements, you are looking at the assertions or the statements by directors. So the directors are the ones who are stating that our bank is 1 million, our liabilities is 2.5, our equity is 500,000. The directors are asserting that to you, to the public or whoever might be interested in those financial statements. So those assertions are the ones that you as the external auditor will have to test. You as the external auditor will now have to test those assertions. So they go on to say the assertions are then grouped in categories. So the two categories of assertions that you're going to come across, or that are going to be stated in the financial statements, we have assertions as per transactions and we have assertions as per account balances. So if you can just highlight for yourself the assertions as per transactions, that is the statement, that's the income statement, right? So they are saying certain things about the income statements are correct. That's what they are asserting. They are saying certain things about the income statements are correct. We have assertions about account balances. They are saying certain things about the statement of financial position are correct and accurate. We're stating that for you, right? So you, as the auditor, you now have to see, okay, is this thing that is being asserted accurate? Is this thing that is being said, is it really correct, or this person is just asserting a bunch of things? Right, so now that's when it gets a bit interesting. So it's almost like you are testing the assertions of the directors and those charged with governance of a company. So now we have the category of what they are going to be asserting. So they are going to be asserting that certain transactions occurred, that's occurrence. They are going to be asserting that the transactions that happened were complete, that's completeness. They are going to be asserting that the stuff that they are presenting to you is accurate. They are also going to be asserting that they also took transactions within the correct cutoff time. They are also going to be saying that they are asserting that they classified everything correctly. They are also asserting that the assets that they declared they do exist. They are also asserting that there is accuracy, rights, and obligations regarding the debt that they might have. They are also asserting that there is valuation, the valuations and the allocations were done correctly. They are also asserting that the presentation was, these things were presented in the correct format, right, that it should have been presented to. So that's what you now have there. Occurrence, completeness, accuracy, cutoff, those are the assertions that you as the auditor has to test. You have to test those assertions. Then they go on, and something that you have to just understand is transactions are going to be occurring, right? A transaction occurred, meaning when you're dealing with occurrence, you're dealing with your income statement. And you can't have an asset account occurring. So these things are going to be split between the account balances and the related disclosures. But you now have to ask yourself, okay, existence in an income statement or a sales figure cannot exist. An asset can exist. Right, so you just have to look at it from that perspective of, okay, we have an income statement and we have a financial statement. Which one is going to be falling on where? So it's a beautiful exercise that you have to just go through. But what are they talking about? Assertions, these are statements being made by directors and those charged with governance. But because you are an external auditor, you are not part of the process. God forbid they could be lying that they have so and so in the bank and there is nothing. So you have to now come and see and test, okay, is that bank account accurate? They can be lying to you and saying, no, we have XYZ machine. Now you have to also go to the fixed asset register and see, okay, is this asset really belonging to ABC company before you give a report? So assertions are going to be following you. And you must be able to classify, okay, these assertions are going to be falling in the income statement. These assertions are going to be falling in the financial position. And when you get to that level, then you will not have any issues. So remember to like, subscribe, share, and do drop a comment. Assertions, it's something that you might want to play twice, play again and stuff until you get it right. If you're struggling with it, please do take your time and go back to your study guide, go back to the additional information that they would have said. Drop a comment, I'll re-explain if there's a need to be, but it's something that if you're going to grasp it now, even when you get to your 3rd level, 4th level modules, you're never gonna struggle. Right, when you look at a financial statement, you are looking at an assertion by the directors. Directors of ABC company assert that. That's the part that they don't write. I wish they taught us that in FAC so that when it comes to auditing, you won't have problems. Because you are taught, okay, this is the financial statement of financial position of ABC company, but it's actually an assertion. which is being made by the directors. Okay, so the directors of ABC company are said that, okay, this is assets, this is liabilities, this is our sales, this is our profit, this is our cost of sales. So because they are asserting all of that, you now have to test, okay, did the assets really okay? Did the sales really okay? Or do the assets really exist? The presentation, is everything presented according to the relevant standard, which is the international IFRS, International Framework of Reporting Standards. Guys, thank you so much. If you reached this part, thank you so much for listening, and please do make sure that you like, you subscribe, and you drop down a comment, and we'll see you on the next video.